Hey traders, checking into the stock market today. Overall, bulls keeping their control as we look forward to CPI numbers tomorrow at 8:30 a.m. Eastern. That's going to set the tone for the day tomorrow pre-market, so I'm going to be keeping an eye out. And other than that, we had some volatility out of SPCE in response to Richard Branson going up to the edge of space. Space? That's not space. Come on. So starting it off with SPY, ever since the gap down brief fear, the first fear we've seen in weeks, that was very short-lived. First hourly oversold conditions on SPY in a long time. And here we are, back at the all-time high, and 3 solid green days in a row. So hourly oversold, scouting a daily higher low, daily EMA 12, and there's the follow-through. So it's our new benchmark level. As long as 427.52 is support, the bulls have complete control. QQQ, double top of the all-time high, but certainly not a convincing rejection. We technically broke the level, but only by 13 cents. We would have to break the low of today, tomorrow, 360.83, if we're going to call that a meaningful double top. And we have the line in the sand level here as well, 354.42. And again, first hourly oversold conditions, scouting a daily higher low, daily EMA 12. The most significant fear in QQQ that we've seen in the last 3 weeks was the time for a bull entry. Other than that, line in the sand has to hold for the bulls to keep their complete control, and daily EMA 12 is a nice guide as well. IWM, one of the names we're scouting for a daily lower high. There's a lot of space for that daily lower high to form, anything under 232.08. And there's a lot of growth names that fit the criteria of scouting a daily lower high over the next couple of days and not being positioned well for the next time the broader market consolidates. So we're going to go through some of those names. XBI is one of those names that stands out. ARKK, daily bounce right now, not very meaningful. And again, lots of space for a daily lower high. CRM, nah. We are looking for a daily lower high there, but it's not the same growth setup that I'm looking at. But XBI, ARKK, NIO, another name, tons of space for a daily lower high to form. So watching for some of those names to form daily lower highs, while many other names are in very strong daily uptrends. Big tech certainly standing out for their uptrends. Financial sector had a strong day today, strong bounce the last 2 days. It's earnings season now this week, and the financial sector has earnings tomorrow, Wednesday, Thursday, as a big chunk of the sector earnings. And then we're going to roll into Netflix next week, and then we're going to roll into the tech sector the week after that. So financial sector bulls showing up the last 2 days, anticipating earnings and anticipating a bullish reaction to earnings, judging by the last 2 days. That will remain to be seen. And the financial sector is also going to react to CPI numbers tomorrow. So again, the way that we've been viewing this is the 2-day time frame. We anticipated the daily higher low was the most likely scenario compared to 35.18. And now we broke our double top at 37.05, although only by 9 cents at this point. Not entirely convincing, but the hold of support and the break of resistance is shifting momentum back towards the bulls. The question that remains from here is, will the reaction be bullish to earnings? And what will the reaction to CPI numbers be tomorrow pre-market? Healthcare remains a strong sector. New all-time high today. Upper wicket profit taking. Still in an hourly uptrend. And our line in the sand level and our gauge of whether or not the bulls have complete control is 127.11. If that level is support, the bulls have complete control. And it's nice that we have that new level on so many names. Before SPY gave us that support, we didn't have a clear level anywhere nearby. So as soon as that new line in the sand is created, we have something close by that we can be looking at. Something that swing traders can be basing stop levels off of. So I always like when we have that new clear level. Apple gave us one, Amazon gave us one. So many names that had nothing nearby now have that low of last Thursday as a key short-term support level. Biotech sector, so again, one of our growth names where the daily lower high is absolutely the most likely scenario. And if the low of today, 131.65, breaks tomorrow, our daily lower high is set, and we're looking back down at our low of 128.24. Growth names have a tale of 2 time frame setup. because most growth names, we are absolutely scouting weekly higher lows with a lot of space for those weekly higher lows to form, but we're scouting daily lower highs to be the result of the current bounce. Those are two completely opposite directions. So the direction that you are most interested in is determined by the time frame that your trade is based off of. So if I'm looking for a weekly higher low, I need to see a setup on the daily time frame that gives me an indication that the bulls are shifting to make a trend change on the daily time frame back in their favor. So what that would look like from here would be topping out on this bounce, holding the low, and then breaking the high of the bounce to set a weekly higher low. But again, a name like XPI is not positioned well if the broader market were to have a bearish reaction to CPI numbers tomorrow. We'd be looking back down at the low of last week fairly quickly. SMH bulls, very significant bounce. Looking back up at limited resistance, 262.10, 262.49, little double top there. That's the only level that we're looking at. And even if we reject, this bounce is significant enough where we have created some decent space for the potential of a daily higher low to form. Bigger picture, it's a weekly test of EMA 12, and it is still holding. That's now 2 back tests and 2 holds in the last 2 months. And with that, we know NVDA certainly still keeping control. New line in the sand level created, our daily higher low of 788. We had an inside bar break bull on a gap up open. Generally, I don't like trading inside bars that break on gaps, but bulls held their gains, and NVDA stood out as a lead bull for a good part of today. Solar sector, solid bounce as well. Confirmed daily downtrend, 0 bear follow through. So from here, we're going to be scouting anything under 92.49 as a daily lower high. But the space has been created where the next time we pull back, there is enough space for a daily higher low to try and form compared to 84.05. And the weekly consolidation is still very healthy on tan. Little weekly higher low already formed into continuation, and bulls are hoping for a repeat of that little weekly higher low. MSOS, little gap up open, and anything under 41.36 is just a daily lower high. So what the bulls will have to do, if we can't break 41.36, have to hold the low of the pullback and confirm a daily trend change back to the bulls to try and confirm a little weekly higher low is now set. So bulls not giving up, still working on this longer term momentum shift, but they certainly still have proving to do. 41.36 and 42.06 are key resistances. The VIX, we're watching 2 falling wedges here. There's a short-term falling wedge from the last 2 months of trading, and there's a bigger picture falling wedge from the last many months of trading. I'm just going to focus on the short-term one first. We're heading back down towards our low, 14.25, 14.10, and I would anticipate a bounce off this support line if we were to drop down towards that level from here. But again, the bounces are lacking follow-through as the bulls keep control of the broader market. The dollar is maintaining daily higher lows, barely. We know we're scouting a weekly lower high, anything under 93.44. When we lose the daily higher lows, our weekly lower high is set. So our last daily higher low is 92. Bulls held 92.08. It's not a convincing bounce off that level at this point. If 92 breaks, the weekly lower high is set. Metal bulls and all commodity bulls are hoping that happens. And gold had an inside bar bear break today, straight into a V-shaped recovery. Could this be our daily higher low set on gold? Possible. Little daily bull flag, and if we get over 18.19, I will consider this enough of a daily trend change, because again, all I'm looking for on a daily trend change is for the weekly bounce to be significant enough to not be a weekly bear flag. And if we're looking at our retracement levels, we want to see these bulls get back towards 50%. And if we get a new higher high, we're going to be at 45, 50% retracement. And again, we'll then be scouting for a weekly equilibrium as opposed to a weekly bear flag. Silver, daily higher low is set at 25.76. Bulls must break 26.77 if we're going to confirm the daily trend change and negate a potential weekly bear flag. That being said, the miners closed weak today. The miners closed at their low of the day while the broader market was strong. So we have the low of the morning, big bull move, and then rolled over into weakness. Look at what gold did. This was the morning move that GDX responded to, but if gold were as weak as the miners, we would have closed down here. And obviously, we didn't do anything of the sort. So it is another scenario where the miners are showing us relative weakness versus the metals. We're going to anticipate a notable reaction on the dollar and the metals to the CPI numbers tomorrow morning. But bottom line is, both gold and silver do still need to confirm the daily trend change back in their favor. And the miners still setting daily lower highs on their bounce attempts. Oil, anything under 76.98 is a daily lower high, but bulls are still holding on to their bounce. We would have to lose the 4-hour uptrend for our daily lower high to be set, which means at this point, we would have to fail 74.93 and break 73.16 to confirm a 4-hour downtrend and confirm a daily lower high has been set. So the 4-hour uptrend is our guide. Just like on names where we're scouting daily lower highs like XBI, it's the hourly uptrend that is our guide. For commodities, it's the 4-hour because there are more trading hours in any given day. Natural gas and oil are more correlated the last month or so than I've seen in a long time. And today it stood out where natural gas was a lot stronger than oil. So here was a drop all Sunday night into Monday, wee hours of the morning. And then here's, look at this 4-hour bounce here from the low. Natural gas, solid drop Sunday night into the wee hours of the morning. Here's that 3-hour bounce. So 7, 8, 9 a.m. versus 7, 8, 9 a.m. A much bigger bounce. Daily, looking right back at the recent high of 380, and the 4-hour, here's the setup where oil had the potential that I just drew would be like this, but natural gas does not have that because we already broke resistance. So the 4-hour uptrend is still our guide, and anything above 360 is a 4-hour high or low. Limited resistance, and natural gas closer to resistance on the daily from where we came from than oil is. So pre-market, we'll have to be watching what the reaction to CPI numbers are. There is a double top at the all-time high on QQQ, but bears will have to prove notable follow-through. So today, I didn't do much trading. I ended up with maybe a 25% day loser today. And heading into the day, I knew that was going to be the case as far as I was not going to trade much. And again, when you're doing this for a living and you're doing it day in and day out, you can recognize even the slightest changes. Humans are creatures of habit, just like all animals are, whether it's dogs or whether it's goats or whatever animal you got. They love their routine. They're comfortable. That's when they are relaxed. When you change the routine, it's a stressor for them. And humans are not very different. So as far as a trading routine, so yesterday I had a couple dozen friends over. We had a big southern broil, Louisiana broil with crab legs and shrimp and all the veggies and all the good stuff. Lots of ping pong was played, some great matches. Long story short, that's not my normal Sunday. And I was playing host and then cleaning up, and then I got to bed later, and my Sunday into my Monday morning and weekly preparation, and not preparation as far as looking at charts, but preparation as far as sleep routine and wind down that Sunday night, that was all thrown off. So I know, again, the example that I give is, as traders, we have the power to choose when we play this game. And that is invaluable. And again, the analogy I always give is if I'm a marathon runner and I'm running a marathon, the day the marathon comes, if you have a sore knee, too bad. That's the marathon. But imagine if you're a marathon runner and you can wait and choose the day and say, I am feeling like $1,000,000 today. Today's the day we're doing the race. As a trader, you have that power on a daily basis. So I was ever so slightly off today, not much at all, But knowing that there are hundreds of trading days in a year, I'm going to take it easy on the day where I am slightly off. So I did take a couple trades. I was a bit more picky. SPCE was a sell the news event. That is not surprising. So I have a video on YouTube specific to sell the news, or priced in. What does priced in mean? If you Google that, it'll come up as far as a video. And priced in means the market knows what's going to happen. Was there a chance that the rocket didn't go up? Was there a chance that something bad happened? Yes, but what was the probability of those chances? Let's say 2%, which is probably giving it a lot of leeway. It was probably less than that. But let's just say, for argument's sake, 98% chance that he's going to go up to the edge of space. He's going to claim he went to space, but we know he didn't go to space. And pulls back. 98% chance everything works well. That means that on Friday, there is 98% of the move is priced in. And that is the vast majority of the move. So when it is successful, who is left to buy? Only someone who does not understand the game of trading. This is a very important concept to understand. Understanding this concept is why I sold my Canadian MJ holdings the first day of legalized sales when the market was a raging bull and it was doing nothing but going up in blue sky breakout, and everybody's talking about the future and how these names are going to go up 5 times and just hold for 10 years. And no, it's a sell the news event. We know it's going to happen. Everybody that's going to buy for this event has already done so, and the only thing left to happen is bulls to sell and shorts to go short. So I was looking for today to be a sell the news event. I wanted a gap up open. Looking at pre-market, I was saying, okay, I'm getting ready to short SPCE at the open. And that was when I was getting my preparation done at 7 a.m. Then we roll around heading into the open, and we've dropped 7% from the highs of pre-market. And it's not a gap up open. From there, I'm not shorting anymore because the trade didn't come to me. It's not my ideal trade setup. Give me that gap up open, I short it. In the end, in hindsight, it would have worked fine if I shorted it at the open. And we had some news come out as far as dilution, which definitely magnified the sell the news reaction. But for me, it's just simple as it's not the trade I was looking for. The trade didn't come to me. And I have no regrets about not shorting this. Because again, everything changed from 7 a.m. to 9:30 a.m. as far as the setup. So aggressive bears definitely had opportunity, and congrats to the bears. I did attempt a bounce trade because we had clear daily support with a bunch of levels right off 43. So as we are dumping on the morning, I said, all right, it's a news reaction, so RSI levels can get way extended. But I am watching for, and it even halted on the way down, but I said, okay, on a break of 43, I'll get interested. So we break 43. This is the candle where 43 broke. It got a little bounce. So 43 breaks, I make an entry. I'm filled at maybe 43.20, and I sell half when 44 breaks. So 44 breaks, I sell half. My break even is now from 43.20. Maybe I make an 80-cent gain. Or 40, yeah, 43.20. No. Yeah. Okay, I'm a little confused. It was a break of 44 is what I entered on to play off of 43 support. So we broke 44. Very little follow through. I entered 44.20. I sold the break of 45. So 44.20, 80-cent gain. 43.40 is my break even. And I put my stop at 42.99. And I said to myself, where I was live streaming, I said, I don't want to stop out here at all. Because at that point in time, if I stop out, that 5-minute RSI is going to be down almost in single digits. It'll be in the low teens. But if there is no support level nearby, if it's a falling knife, and if I do not put a stop, that means I am not in control of that trade. And if I want to be in control, I will then have to flip little oversold bounces and try and scale in, and I'll be essentially fighting the current, trying to salvage a trade that I have lost control of. So I stopped out with a tiny loss. It ended up being maybe a 5 to 10% day loser because it was a 40-cent loss on a half position. But the bottom line is I have to stick to that stop level. And we ended up dropping down another few percent from there. And then the bounces just never lacked, or I should say the bounces never had any follow through. So a failed oversold bounce trade. And then I took a short on XLF. 5-minute RSI extremely overextended as we head to our triple top at 37.05 resistance. So entered a short, just looking for consolidation. And then it was very clear that a 15-minute bull flag was forming because the low of consolidation was 36.88. And then we held it a couple more times. And so I just exited. I didn't even wait for 37.05 to break. As soon as 37.01 broke, I exited the trade because I knew at that point, if it's a 15-minute bull flag and we're going to see a new high of the day, the odds of breaking 37.05 are very likely. So that was a very small loss as well. And those were my only 2 trades. And I ended up with, again, like a 25% day loser. And it was clear to me that I should take it easy today, which I already knew. But there were a couple clear low-risk setups, so I took them. And that was that. So they can't all be winners, and I'm certainly perfectly okay with how today went. And we'll see what tomorrow brings as far as a CPI reaction, and I'm anticipating a little bit more volatility tomorrow. SPY's volume today was extremely low, although it looks like it picked up a bit at the end of the day, but lowest volume day in at least 8 days. So need that volume and volatility for that opportunity, and I'll be watching for an SPCE hourly lower high to be the result of the next bounce. So here's another scenario, just like PLTR last week. Remember PLTR closed week, and I said if we gap down, I'm looking for the bounce. If we gap, or if we open higher, I'm looking for an hourly lower high. And if we open where we closed, I'm watching for a potential bottom fishing play. Same thing for SPCE. I have no idea if there will be a setup that I like tomorrow. There are only 3 ways that it can open: higher, where we closed, or lower. And I would be looking in completely opposite directions based on which one of those we get. So I have to see what tomorrow pre-market brings, and I have to see what CPI direction gives us as far as the reaction. But I am interested in names that are scouting daily lower highs. So if there's any weakness in the broader market, I'm scouting daily lower highs on XBI, ARC, NIO, and all these growth names. And if we do see daily lower highs set and a drop to lower lows, at that point, that's when I start scouting weekly higher lows. So that's my rough outline. Hope you had a good day. Do good things. See you tomorrow.
First Zinnia. This is the corn that the squirrels planted all winter. Coming up in random spots. Random sunflowers they planted. Winter squash fruit.